Last year, Volkswagen CFO famously said that the roof was on fire. The company's finances were in crisis. This wasn't coming from me or any other YouTuber. This was directly from the company themselves. Well, the Volkswagen Group's profits and earnings and everything they did in the first quarter of this year has now been revealed, brought to light, and it doesn't look very good, put it that way. Hello, my friends, and welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Great to have you with us. I don't know why. I think I've never mentioned this on the channel before, but growing up, I always really liked Volkswagen's cars, particularly the Volkswagen Golf GTI and the Volkswagen Golf R. I don't know why, but those hot hatches appealed to me. But to be honest, I think Volkswagen's become a bit of a boring company now. And, well, while they become more boring and more bland, their sales have continued to fall, at least profits anyway. Volkswagen's operating profit plummeted by 37% in the first quarter. This confirms the poor figures announced in an ad hoc release 3 weeks ago. Operating profit fell to 2.9 billion euros, which is around $3.2 billion in the first 3 months. In the same period last year, Volkswagen had earned 4.6 billion. Now, keep in mind that's 4.6 billion euros. So basically, profits have come from 4.6 billion euros down to 2.9 billion euros. And Volkswagen's debt is still sitting at more than $200 billion. That's a lot of debt. Profit after tax was 2.2 billion, down 41%. 41% after tax fall in profits from the Volkswagen Group. Well, that means that net cash flow fell to minus 0.8 billion. Net cash flow minus 0.8 billion. That's really the key number I think you've got to take away from this. Cash flow is non-existent for a company that has more than $200 billion of debt. That's a bit of a problem. In the first quarter of 2024, it was significantly lower at minus 2.5 billion euros. Net liquidity fell 3.6% year on year to 33 billion euros. Now, liquidity doesn't mean the group are in the positive by 33 billion because they do have a lot of debt. It's just a reporting number. There's also a profit warning at Porsche, which is a big part of the problem. And if you want to see what's happening at Porsche, which is probably even worse than the Volkswagen brand itself, then check out my video. That will be on the channel today. Volkswagen intends to maintain its forecast for the full year of 2025, a return of 5.5 to 6%. Profits at the company are basically half of what they historically were, and cash flow between 2 to 5 billion euros. It's a pretty wide range, cash flow of 2 to 5 billion, and an increase in sales of up to 5%. But assumes that the results will be at the lower end of the range. 2 to 5 billion, but the results will be at the lower end. Why say 5 billion if the results are not going to be 5 billion? It's ridiculous. I don't know why they can get away with saying this stuff. And I don't know why they can get away with claiming their sales are going to go up by 5% this year. The probability of Volkswagen Group sales going up by 5% globally this year, guys, go buy a lottery ticket. You're more likely to win the lottery than for that to actually happen. The poor figures published by Porsche yesterday will jeopardize these targets as well. The Stuttgart-based car maker has revised its return expectations from over 14% to around 6.5% in terms of profits for Porsche. Sales declines in China and the USA have been the key reasons for these problems. The group's return on equity fell to 3.7% in the first quarter of 2025, compared to 6% in the same period of the previous year and 5.9% for the full year of 2024. The fact that it did not decline further is due to the increase in sales to 2.1 million vehicles, plus 1%, not 5%, which led to slightly higher revenue, 78 billion euros, plus 3%. Volkswagen generated the sales increase mainly outside of China, minus 6%. So, the most important car market in the world for the Volkswagen Group is unquestionably China. It's not America, it's not Germany, it's China. And their sales fell by 6%. In the USA, sales went down by 2%. In Europe, sales rose by 4%. In South America, where obviously margins are pretty slim and average sales prices are quite low, sales went up by 17%. So really good numbers for South America, but it's probably not the market Volkswagen want to focus on. The core vehicles, Volkswagen, the core brands, I should say, Volkswagen, Skoda, Seat, and Volkswagen commercial vehicles, and progressive Audi, Bentley, and Lamborghini brand groups performed well. Poor sales figures from Porsche actually really hurt the company in the first quarter of this year. So here's another problem: CO2 penalties. The result at the beginning of the year was burdened by slightly negative price mix effects, meaning more affordable vehicles, and above all by special effects amounting to 1.1 billion euros. Without the latter, the operating result would have been 4 billion euros and the return on sales would have been 5%. But I mean, this is not going to change, guys. Volkswagen will probably write down its asset values in many locations around the world over the coming years. More than half of the special effects, 600 million euros, are attributable to provisions related to the tightened CO2 regulations in the EU. And CO2 regulations in the EU and China are only going to get worse, or better if you want to breathe the air in those places. But the fines for the Volkswagen Group are going to get higher. And so this $600 million cost is going to actually increase. Now, the remaining provisions were made for the restructuring measures at Cariad, 200 million euros. That's their software division, which is a complete basket case. The ongoing aftermath of the emissions scandal and the US tariffs on vehicles already in transport, totaling 200 million euros. Porsche and the Volkswagen Group have Audi, in particular Porsche and Audi, because they don't make cars in America. They have cars sitting at ports in America, sitting there just waiting, praying. They're just praying, and they've admitted to this fact, not praying, but hoping. I'll call it praying, because that's what it basically is, that Donald Trump will change his mind on tariffs on German-made cars, or on tariffs from European-made cars, but particularly German-made cars that are going to America. Now, very important point here I want to make to some people who have been commenting and giving some false information in the comments on the channel here. Trump is obviously applying a 25% tariff to German vehicles. Germany and Europe have applied a 10% tariff on American-made vehicles, all of them, not one segment, all of them. All American-made vehicles have had to pay a 10% tariff now for many years, and America has not enforced the same policy on Europe. So Europe is crying foul, and the Volkswagen Group and Porsche have been saying this is not fair, but the response is, I think, justifiable. Now, do I think Donald Trump's tariffs are a good idea? Are they thought through? Are they well measured? No, that's not what I'm saying at all. Now, in response to my comments, people have been saying this: yes, but Electric Viking, you're completely ignoring the fact that there is a chicken tax on pickup trucks made in Europe and Germany. And I would say to these morons, and unfortunately they've led many of you astray because I've seen hundreds of likes on these comments, you haven't thought through your comments in any way, shape, or form. Now, here's why. Porsche said yesterday they will not make cars in America. They said this is because they won't be able to sell enough to make a profit. They said even with the 25% tariff, they're better off still making Porsches in Germany than making them in America. So what people are proposing in the YouTube comments on some of my videos is this. They're saying that if there wasn't a tax on pickup trucks made in Europe for America, therefore Europe would make millions of pickup trucks and send them to America just to make money, which is utterly absurd. It is so absurd. I cannot believe anyone actually thinks this is intelligent or logical, because it's mental. Now, let's go with this stream of thought. These claims, which are obviously criticizing my comments numerous times. Let's go with this and just see how this is going to play out. One, Europe doesn't have a pickup truck market at all. It's minuscule, and they don't make Ford F-150s. They never have. They've never made large pickup trucks that Americans buy. Never, right? Never in the history of Europe have they ever done this. So when America applied this chicken tax to Europe, it was taxing nothing, because Europe never made pickup trucks, right? You might as well tax, this t-shirt here that I'm wearing. Americans are not buying them. It means nothing to anyone in America, number one. Number two, let's say Europe was like, well, you know what? There's no chicken tax on pickup trucks because America hasn't applied it. This is in theory, right? If there wasn't that tax, let's start making pickup trucks just for Americans. Europeans are not buying them, so it's not for Europeans, just for Americans. Let's make them in Europe, where it's 20% more expensive to make vehicles than America. That's the average number. Then pay the shipping cost of around 5,000 US dollars per car to ship them to America and somehow compete with Ford's F-150, the Ram 1500, and the Chevrolet Silverado, and other models of pickup truck coming from brands like Toyota, who make them where? Nissan as well. They make them in America at a much lower cost than making pickup trucks in Europe. Plus, they don't have to ship them anywhere. There's no $5,000 US shipping fee on every individual car. There's no port fees, having to have your vehicle sitting at the port and paying fees and having all this other stuff you've got to do. That is insane. So, this concept of Donald Trump going, oh, these people are saying there's a chicken tax on pickup trucks from Europe, therefore it's fair that Europe has been taxing American cars for decades, 10%. 10%. We've been taxing them nothing because there's no existent pickup truck market in Europe. There never was, and they're never going to make them under this strategy. Donald Trump's not going to go, oh, well, in that case, there's been a chicken tax. I'm going to revoke this rule on Germany, and there'll be no 25% tariff. We'll make it 0%. This is insane. Trump is not going to do that, and it's illogical to suggest that he would do so. Now, I hope all of that made sense because I understand it's kind of a confusing idea. But the point is to say that technically, Europe is billions of dollars ahead of America when it comes to tariffs. So Donald Trump's tariffs would have to be in place for probably 5 years in order for things to play out and therefore become theoretically equal, where you could say, well, all right, Europe's now paid 25% tariff for 5 years. They applied their 10% tariff on us for the last more than a decade. Now we're equal, right? I don't think it's going to work that way, but in theory, maybe that would be the case, potentially. Either way, I don't see Donald Trump removing the 25% tariff on Porsche, Audi, or Volkswagen Group cars that are made in Europe and sent to America anytime soon. That is highly unlikely. The other thing that's incredibly unlikely is the ridiculous claims from the Volkswagen Group saying they're going to sell an extra 1 million cars. The sales for them are going to go up by 5%. They're going to sell 1 million more cars this year. Who exactly is going to buy these cars? Where are these people? I mean, the number one car market in the world is China. We're literally looking at more than 32 million car sales a year. That's like 38% of the world's car sales. And the Volkswagen Group cars, their sales are going down in China. They're not going up. So how is the Volkswagen Group going to magically sell 5% more cars worldwide this year? They're not. They know it. They're just lying to investors. That's what this is. This is just flat out lying. They know this 100%. If think about it like this, right? The former CFO at Porsche said Porsche is finished in China. And if that is true, and if you look at their sales, it looks like it could be going from 100,000 sales a year down to 40,000. If Porsche is finished in China, then Volkswagen Group's profits are going to fall further, sales will fall further, and the company will be in more trouble than ever. This is the reality the company has to face. And it might as well be honest. There's so many brand fans online. There's so many brand fans that are basically spreading misinformation. There's also people who hate Donald Trump, which is totally fine. I'm totally fine if you want to hate someone. Be you. That's totally fine. But those people have such a vested interest in their hatred that they're writing comments that are tricking you into these false narratives. So my suggestion is this: regardless of your political affiliation, the way you feel about something, do not believe someone writing a comment. It's not worth believing when you can easily fact check it. Jump on Google, fact check it, do your own research. Be very cautious about Facebook, social media, seeing comments. And even if that comment has 1,000 likes, does not mean it's actually objective, true, or real. It means you're probably in an echo chamber and you just don't know it. Now, that's not a reference to all of you, just to a very small number of people that watch YouTube, watch videos, jump on social media, and get involved in all that stuff. Let me know your thoughts in the comments. Bye-bye.